Hi everyone, just recording a quick quarterly update. We're going to be covering Q2, so that's just the last 3 months just behind us. And this is going to be a slightly different setup going forward. So, for those of you who have attended in the past, this is no longer a live Zoom call with a eToro host, etc. But it's going to take, well, have more flexibility in it. So this time round, I'm going to be recording a video update for you. In the future, we could do Zoom again, or I could do a live stream. So let me know what your preference would be, and yeah, we can do any of those options or any others that come to mind. So let me know what you prefer. In this case, it's just going to be a quick video that I will upload to YouTube. And so feel free to, if you have any questions, leave comments either on the YouTube video or on the relevant eToro post where I'll also be linking the video. So let's just start here by taking a look at the stats for the last quarter. So April, May, June, you can see April, May were a little bit slow, but then June we had a really, really strong month actually. And it's funny how years that can seem to not have the best start, or there's a lot of bearishness, a lot of not kind of the best sentiment floating around, can end up being good years. You never really know, so you always have to be on your toes and try and do your best. So at the moment, we're already up 23% for the year. Not a bad year, and we're only a little bit further than halfway through. And we'll get to it in more details, but I do think that this could be the start of a very bullish period. So hopefully we can have a very, very strong year or few years, but we'll get to that in more detail soon. Then in terms of risk, it's pretty much my usual. So I've tried to keep it around a 5 with the occasional move up to a 6, which would have been mostly caused by, I guess, a little bit of extra volatility in the crypto markets, but nothing too crazy there either. So let's go ahead and have a little look at our current portfolio and have a talk through it. So first positions you see are Chinese stocks, Tencent and Xiaomi. I have small positions in these. You can see they're sort of, what is that, like 1.5% of the portfolio each, something along those lines. And the reasoning here is just that I think both of these companies are really, really strong. Tencent owns WeChat and all sorts of, you can kind of compare it, I guess, to a sort of meta in China, and can't really ignore China these days. But there's a lot of political issues there and extra risk. So I'm not really comfortable having a huge allocation. Things may change over time, but at the moment, I feel like I just want to have small exposure. Xiaomi, I don't know if you know any of their products, but personally, I have quite a few, from the electric scooters to they make really good kitchen products now, or vacuums. And some of these stores are starting to pop up. I've seen one in Lisbon. It looks a little bit like an Apple store, and they're very, very high quality products. They work very well. And yeah, I feel like it's kind of undervalued. It's not that well known, but I think it will be. Like, they have a very good price point. It's kind of the economic, you know, affordable side of China, but also showing their tech capabilities. And there's a lot of that kind of stuff happening in China right now. Like, if you think of DJI, right, the company that makes drones, or Huawei, some very high quality products at much more affordable prices. And I do think we're going to see that trend continue to increase So nice to have a position in those. Then we move on to some names that you'll be more familiar with. And you'll see my post from 1 or 2 months ago where I kind of made the transition into most of these US tech stocks, which turned out to be really the perfect thing to do. We'll look at some charts in just a minute. But some of them have really moved very significantly. So Apple, for example, you can see you wouldn't have really known, but it's made new all-time highs. You know, sentiment is still really low. If you asked most people or the average investor, they probably wouldn't say, "Hey, yeah, Apple is at an all-time high." So whenever you're an all-time high, it just makes things so much easier because there's no one who's underwater. There's way less sell pressure. There's more optimism. So it's good to see these big tech stocks moving so happily upwards. Airbnb, again, I think here it's up 40%. I think I happen to just get a very good entry point, but still not going to complain. This is a stock that I think IPO'd maybe at a bit of a tricky time, and it hasn't really had huge performance. But I think it will. You know, it's such a game changer in terms of business that just really affects a huge industry, and they make a ton of money. So this is definitely a stock that I want to be holding looking into the future. Let's take a quick look at the chart. Yeah, you can see, you know, they IPO'd in late 2020. So basically they had quite a lot of COVID times, and then from 2021 onwards has kind of been a bear market, so it hasn't really had a chance. But I would be willing to bet that as this recovers and makes new highs, and maybe, you know, they show some increased earnings and other good signs, we could see Airbnb really make a move. Market cap 100 billion at the moment. It's like, it reminds me a little bit of Facebook, now Meta. You know, if you look back at the IPO, it wasn't great. You know, it really crashed, and then it had really what is that, a year or more than a year of being below the IPO price, and then it just took off and never looked back. Here it was $40. Now we're all the way up to, well, the highs were nearly 400. And, you know, this is a stock that's been just crazy. You know, the lows here just at the end of 2022, it was under $100, and now we're just at about 300. So huge stock, but this has done a 3x rather quickly. So I'm very happy that we had that in the portfolio. Amazon, same kind of thing. Maybe we'll get back to crypto in a little bit so we can talk about them all together. Then this is stock that is not as known. I believe it's a Swedish company, and they're just the chart is just amazing. The earnings just keep growing, their revenues keep growing. It's just an absolute killer stock. It hasn't moved as much because the markets over the last few months have basically only been driven by the tech mega caps. That's kind of where everyone was looking, or at least institutions were looking to get long, or at least have some exposure to equities. And I guess those kinds of names are seen as the safe place to put your money. So that's where all the money went. And the kind of smaller cap stocks, or stocks that are simply in other sectors, haven't really caught up yet. But I think we will see that in the coming quarters. Similar story with HubSpot. A little bit of a smaller, like less well-known company, but had a really nice breakout here and has been moving up. Then here we have, let's talk about Nvidia last actually, Palantir has been a tricky one. It really got absolutely crushed, but it is run by, well, actually, we can kind of talk about these two together because they're both kind of connected to AI. And Palantir is really run by a visionary, Alex Karp. I don't know if you can really compare him to Elon Musk, but something along those lines, I think quite misunderstood. And if this can really get a foothold, it's just an absolutely crazy business. And I've talked about it for a long time. I've been long. It did get crushed, but you probably recognize the pattern here, right? This is a little similar to Airbnb, a little similar to Facebook. And once things turn around, I think this could be a huge, huge company. So we've managed to ride it up here a bit. And yeah, we just need to continue to see them perform and monitor the chart. So yeah, as we're talking about, if you don't know, that they kind of work in, it's not exactly AI, but kind of. So that's why I grouped it with Nvidia. So Nvidia, you can see, is just gone crazy, right? Here it made new all-time highs and it's going for it. It's not just new highs and then sort of slowly making higher ground. It's completely going for it. And look at this gap. I mean, that is a huge gap up for a stock that is already over $1 trillion in market cap. So what's happening here is, I think there's a whole new narrative which is very, very exciting, right? I'm sure you've heard about and probably messed around with ChatGPT. And AI, even though it's really overhyped at the moment, the potential is huge. And I think we're still figuring it out. Companies are being born around AI. We're not sure who's going to be the big winner or what the most valuable use cases are going to be. But it's quite clear that there will be very valuable use cases. That's kind of how I see it. And it reminds me a little bit of the early days of the internet. There were all sorts of companies that were popping up, and a lot of them were trash. But I think that's kind of the way you discover where value is. People build companies doing all sorts of things, and as you build them, you find out this is a use case that's valuable to people, this is not. And some of them just go on an absolutely exponential tear. If you go back and look at the charts of companies like Yahoo when they first launched, it's just insane. And I think that is a huge opportunity that we're kind of looking at now. And it could be starting to happen, or it could take a few more years, right? Like if you think about the internet, there was sort of a decade from early to mid 1990s going into the 2000s. So, it could take longer, but at the same time, the internet is an accelerant for AI and the spreading of information as well. I'd recommend listening to this. It was a very good conversation here, mostly because of the contributions of Jim Roppel, this guy, and he was talking about, he's a hedge fund manager who's been around for a long time, and he was just talking about how there could be this new AI wave which would basically drive the whole market. And he was pointing out how Nvidia is the new market leader here, and you can see it, on days when Nvidia is down, everything else tends to be down as well, and vice versa. A bit like, a couple of years ago in the post-COVID bull market, Tesla was the bellwether, right? And everything kind of moved with Tesla, and Tesla was just the absolute market leader. I think Nvidia is now that reference point. So that's quite useful to keep an eye on it and get a sense for how the market will likely move with it. It's an interesting one, because the valuation is already out there. And I think at the moment, it's just kind of people see it as synonymous with AI. They're not really sure what new AI companies to put their money in. So they put it in Nvidia as a kind of proxy. But I think over time, this will maybe calm down a bit as new companies, new AI companies IPO, and it becomes more, not necessarily obvious, but there's more options in terms of actually public companies where you can invest in if you are betting on AI. But yeah, the key takeaway from this is that even though things have looked pretty bleak over the last 18 months to 2 years, you can see, again, I mentioned this in my last couple of posts, we've been on a tear out of nowhere. And if you look to most financial news, no one was expecting this. And as I've said many times before, when you see a new trend, it's worth following, and it usually goes for way longer than you would expect. This is a chart of the NASDAQ. We're not that far from all-time highs. So the same kind of psychology and logic applies, right? Once things get to this kind of level or a bit higher, we switch from that fear and talk of recession and inflation and all that stuff that's been happening down here to optimism. And then as things get moving, it becomes FOMO. And if there is a catalyst like AI to kind of really get that going, it can go absolutely bananas. So that would be fun. Hopefully we're in for a fun few years of technological innovation where, these are the times where if you're paying attention and you invest in the right things, think of, Amazon back in the day. Most companies aren't winners, right? Most .com companies didn't end up well. But if you did your homework and you found Amazon or Apple and you invested in the early days, you can just get absolutely monstrous returns. So that's kind of what I see now as being my job. So I'll be doing a lot of research in this space and sharing my findings with you. And then what else do we have? Shopify, again, amazing stock. Uber, I see Uber again in a kind of similar light. It hasn't had that much of a chance, really. IPO here, it hasn't really moved. Same kind of period, IPO'd in, what was that, 2019, 2020, that kind of period. So finally, we have Tesla. So this is one of our biggest positions, and you can see we've been doing well on it. I added to this position significantly way down here somewhere, like right near the bottom. And we've done really, really well on it. It's up, similar to Meta, nearly 3x from these lows. And it just had a little bit of a wobble just a few days ago after the earnings came out. And I find this quite fascinating, right? How there can be such differing opinions based on the same news. So I would encourage you to read this if you don't already follow Chamath. I thought this was a very interesting piece of writing by him. And he's basically talking about the most recent Tesla earnings. And he's saying how, his first pick in 2016 was Amazon, and clearly he's done very well from that. And in 2017, Tesla, again, done extremely well from that. Very, very successful investor. And he's sort of making these comparisons that, the Model 3/Model Y was the equivalent of Apple's iPhone moment. And he kind of talks about how, the reason the stock dumped following the earnings is because people were looking at gross margins, and gross margins are kind of flattening or declining, or basically not. There's a big focus on profitability, right? And I think it can be very short-sighted. So analysts will see the trend and not necessarily think of why is that the case, right? I've talked about this in previous posts. So the market might think, okay, Tesla is unable to make a higher margin, and therefore this is, a sign of how they assume that they're always trying to maximize their profit right now, whereas that is not necessarily the case. Elon's goal is to make Tesla's cars as ubiquitous, as available and affordable as possible. And that's why he's kept cutting prices, right? Obviously, if you cut prices, that's going to eat into your margins. But people keep on forgetting that that is not the business. And so we have this kind of Tesla moment where he compares to Apple, right? Where they took their gross margins down quite a chunk for a few years. But that's basically an investment in building up your infrastructure, building up a monopoly. And then when you have everything in place, your margins are going to be absolutely ridiculous. So he's talking about, Tesla is working on deals, sharing out their charging network. They have a complete monopoly on that, right? They can charge whatever they want. And now they're also in discussions to license the full self-driving technology. There's also so many other products in the pipeline, robo-taxis, you name it, right? And so he sort of starts to think of Tesla not so much as a car company, but more as a company that has quote unquote apps, meaning these things that you can license out and take a cut. And this becomes a very, very lucrative business because then your margins are crazy, crazy high. So imagine that they've been the ones to solve full self-driving before anyone else. They can then license that out to basically every other car company, and they're just going to have, basically complete monopoly on that, 100% margin, and they will make way more than the margins that they've sacrificed by cutting the prices of the cars. So long story short, I do think this dip here, which was not insignificant, it's a 10% drop, is kind of a bit of a short-sighted reaction on the market's part. And I continue to hold a big position in Tesla. Then what else do we have? I think all that's left is crypto. So we have Solana, Bitcoin, and Ethereum, the kind of big three in my mind. And we have sizable positions for these as well. And, you know how it is with crypto, right? When it gets going, we will see a huge return from these. Over the last year or 18 months, it's significantly dragged the portfolio down. But as I've always said, these drawdowns it's just the price that you need to be willing to accept temporarily in order to then have the huge returns whenever they come. And even recently, they haven't been doing poorly, but they have underperformed tech stocks, which is interesting. So, this is a weekly chart of Solana, and you can see that since June 2022, it's basically just been, what looks like flat, even though it's been fluctuating between $40 and $10. But this is just a really, really long consolidation period, that we see this a lot in crypto. It's a bit like this period, that when things do break out, they then just go absolutely bananas. So here, even if we just get to the previous all-time high, that would be a 10x from here. Usually with crypto, it becomes more exponential, so what would usually happen is, you end up here somewhere, 20x, 30x, whatever it is, and that would be absolutely crazy. Messed up my charts here now. And let me see if I can fix this. I don't know where the automatic should be this. Yeah, here we go. So if you zoom in a bit, you can see that we've kind of recovered from the depths of the FTX days, and we're very close to this kind of pivot level, which is sort of $25. It looks like it wants to break out of it. Here we had a huge spike up into the 30s, and I think we will kind of soon. Bitcoin is looking sort of similar. You know, this was one of the first ever drops below, significantly below that rainbow chart that I've shared many times, that compares it to the cost of mining, etc. And same sort of thing. We've had a long period of just sort of moving sideways. In my mind, it's a question as to whether over the coming year or so we end up back in this kind of range, a bit like what happened here, right? After the very low drop and consolidation period, we did end up having a significant run, but there was another year or so to wait before we had the next exponential move. So same things here. Hard to know if we're going to go straight into another exponential move or if we end up kind of back in this range first. Either or would be a good outcome. And yeah, we also need to bear in mind that with Bitcoin, it's hard to say for certain, but as the price gets higher and higher, it should be less volatile. So I wouldn't be surprised if, you know, future moves, we have less of a drawdown, but we also stabilize a bit. I think at some point in the next decade or so, Bitcoin will probably stabilize in the six-figure range. You know, I don't think we're going to see millions and millions as the price of Bitcoin, which, you know, some people think and could happen. My guess would be that it would probably settle around a few 100,000. Again, you know, that could be easily a 10x from here. So we'll see. And Ethereum, kind of similar story. You can see that all the charts are quite similar. I guess Ethereum, yeah, not quite the same, but sort of similar vibe. I think my highest hopes would be in Solana, just from a technical point of view. It looks the best, I would say, and it's a little bit different to the other two coins. So we'll see. I do think these continue to be just like a must-have part of your portfolio. Just investing in future themes, you know, that's what I've always done and what has always worked very well for me. You don't always know how it's going to play out or the timeline, but if you get the theme right, you will get a huge return. So similar idea to the discussion we're having about AI. You know, the returns in AI, they might come over the next few years, they might come over the next 10 years. But just like with the internet, you know, if you were there, you were doing your research and you're investing in the high quality companies, you could make a killing. And sometimes, you know, we might even see a bubble like we did in the early 2000s, right? And in that case, you don't even need to choose the right companies. You just need to be invested in some internet company and then have good timing to get out before the bubble pops. So a lot of things to consider. Another thing that I didn't mention, you know, Bitcoin's had some other good news in terms of big institutional players speaking very positively about it. First sort of serious ETFs being approved. So it was interesting to me that we didn't see a huge move off the back of that. But I think it's brewing, you know, we will see it. So I think that's pretty much it. That's our portfolio. That's my current thinking. These are the current stats. And yeah, please let me know if you have any questions. And I will continue to do my best here for you. So thanks again for watching the video, for following, and for copying if you are a copier. And I will speak to you soon. Take care.